Q&A. With that being said, ladies and gentlemen, allow me now to do the honors of introducing our speakers to you. We start off with the first session on international trade, tourism, and economic engagement. As I introduce each of our speakers, I'd like them to come and take their seats right here on stage. We start off by introducing the session chairman, who is Professor Lakshman R. Watawala. Professor Lakshman R. Watawala is the past president of the OPA. He's currently a board member of the South Asian Federation of Accountants. He's a founder president of the Association of Accounting Technicians of Sri Lanka, Institute of Certified Management Accountants of Sri Lanka, and Institute of Chartered Professional Managers of Sri Lanka. He has served as the chairman and director general of the Board of Investment of Sri Lanka, chairman of People's Bank and People's Merchant Bank as well. So this is your session chairman, ladies and gentlemen. Let's put our hands together for Professor Lakshman R. Watawala. As our session chairman joins us up, allow me also to introduce our speakers who will be joining us next. We start off with our first speaker, Mr. Anushka Wijesinha. Mr. Anushka Wijesinha is an economist with experience in government, private sector, and think tanks. He is the co-founder director of the Interdisciplinary Public Policy think tank, which is the Center for a Smart Future. He is an appointed member of the Governing Board and the Monetary Policy Board of the Central Bank of Sri Lanka. He also serves in various policy advisory capacities at the Presidential Secretariat and is a board member of several organizations. He holds a master's in economics from the University of Leeds and is an alumnus of the Harvard Kennedy School Leading Economic Growth Executive Program. This is our first speaker. Let's put our hands together for Mr. Anushka Wijesinha. Joining us up next is our second speaker, Mr. Murtaza Jafferjee. Mr. Murtaza Jafferjee is the chairman of Advocata Institute, and we're delighted to have him with us. Let's put our hands together as we welcome him up, ladies and gentlemen, Mr. Murtaza Jafferjee. Our third speaker is Mr. Dinesh Weerakkody. He is an advisor on Treasury Affairs to the President. He also serves as the chairman of the Board of Investment of Sri Lanka, chairman of the Colombo Port City Economic Commission. He currently holds the position of the chairman of the Employers Federation of Ceylon. He is a former chairman of Hatton National Bank PLC and Commercial Bank of Ceylon PLC. Let's put our hands together for Mr. Dinesh Weerakkody. We move on to introduce our panelists. I believe Mr. Weerakkody will join us very shortly. Our panelists joining us today include the following. We have Mr. Chalaka Gajabahu, who is the chairman of Sri Lanka Tourism Promotion Bureau, as well as Deputy Chairman of the United Nations World Tourism Organization's Committee on Tourism and Competitiveness. With over 30 plus years of experience in corporate Sri Lanka, he comes with a wealth of experience and a special emphasis on brand marketing and advertising. We warmly welcome our first panelist, and this is Mr. Chalaka Gajabahu. Our next panelist is Mr. Thisum Jayasuriya, who is the chairman of the Sri Lanka Convention Bureau. His career started with Emirates Airlines, subsequently with Qatar Airways, and then he was at United Holidays, and later he joined Mac Holdings as general manager for their airline division. So this is our second panelist, Mr. Thisum Jayasuriya. With that, we're all set to begin our first session, ladies and gentlemen, international trade, tourism, and economic engagement. I now hand over control to our session chairman, Professor Lakshman R. Watawala.
Good morning to all of you, the President of the OPA, the President-elect, and all others of the organizing committee, and our members who are there for the technical session 1. We are really very happy that we had a grand opening ceremony, and of course the key people who spoke there, both the President and the Governor of the Central Bank, and both talking of the economy and how they have overcome the crisis situation. So I think that's a good thing, and I'm sure what they have spoken of is something that we have to take forward now in our sessions. I'm also thankful to the OPA for inviting me to chair this session, both as a past president of OPA and also someone who has been involved both in the state and the private sector. So I hope that all of you know the real meaning of a professional. A professional is a person who has a very thorough knowledge of the academic area or the theory, and a person who is really someone with the practical exposure. That is the most important. Today everyone is talking of giving jobs to people, but they really don't know that if they come to the OPA, they will give you the advice how it has to be done. Because it's not only theory that is there, but the practical aspects. I think that's why the OPA is very important. The 37th annual sessions is of great importance to take the economy forward. Now everyone will say economy forward, but can we look at the term sustainable economic development? That is the most important. Today you do something, tomorrow if it is not there, it is of no use. So that's why we have to really look at this, and we have a very eminent panel of speakers and panelists who will be able to tell you about this. Just one thing that I want to tell you, of course, they are talking of international trade. We know that our imports are far greater than exports. So can we always speak on that? No. We have to take the corrective action. So the government took some action. They stopped the import of vehicles. But whether that will solve the problem is not there. You have to then increase the exports. Today everyone is talking of free trade agreements. You speak to anyone, any private sector man, oh, free trade agreement is very good. I can import things and make money. That is not the case. We really have to identify what we can export to those markets. Now India is our neighbor, no? They say India has a vast population. You can go and penetrate the market. What is the penetration we have done? If you look at the imports and exports, you know it. So theory is of really no use. We need practical people who can make things happen and get things done. Then on the human capital, it's the same thing. I am happy that Mr. Dinesh Weerakkody, chairman of the BOI, now he say he's the head of the port city. Who are the people whom we are going to attract to the port city? Of course, they'll put the infrastructure, but the most sophisticated industries and digital technologies in the world. Are universities catering to them? Ask this question, you see. These are people are just talking. But OPA should be a place where we can put things into action. That is the purpose of a professional. So we need to see how we can help them in this and then do it. Then search of capital. What is the most important thing? Mr. Murtaza is here. If you, first of all, it is the political stability in a country. You think I will go and put, or anyone will go and put a country where there is no political stability? These are the important things. So we have to realize these things, and as professionals, we have to tell the people what is required for this country, how it can be done. So thank you very much, and I'm sure our learned speakers will be able to speak on those topics and give you the real things, not only the theory, but the practical aspects, how it can be done. Thank you. Our first speaker is already been introduced, so I will now invite Mr. Anushka Wijesinha, co-founder, director, Center for a Smart Future, to speak on the topic Road to Export-Oriented Economy. Over to you, Anushka.
Good morning, ladies and gentlemen. Thank you very much, Professor Watawala, for that introduction, and also to all of you. I see some familiar faces, former colleagues at the Sri Lanka Economic Association, and I think Professor Watawala set the tone really well by reminding all of us that as professionals, we have a stake in shaping a smarter future through export-oriented growth, and that's the topic that I will focus on today. Sorry. Okay. There are two parts to my presentation. The first reminds us that we need to refocus on some topics that are relatively underexplored, as Sri Lanka often thinks about both the roots of our crisis, but also ways out of it. So the first segment will look at some selected aspects. I mean, these are vast topics, so I won't be covering everything, but some selected aspects of Sri Lanka's trade, export, and FDI performance, and their role in not just the economic crisis, but also the way out. The second part will then look at some strategic considerations for Sri Lanka in thinking about how we move forward. Yeah, can I use this? Okay. We hear a lot about tax. We hear a lot about fiscal policy. We hear a lot about problematic monetary expansion. But I think it's important to remind ourselves that the roots of Sri Lanka's crisis do go beyond some of the more recent symptoms. Sri Lanka had a problematic post-war growth model. Even as we were going in for greater foreign commercial borrowing in international debt capital markets, the conditions for how we would grow the economy through export orientation, through foreign earnings, through an export-led growth model did not. Non-debt creating inflows, what we call non-debt creating inflows, foreign direct investment, was fairly unimpressive, and I'll go into some of this shortly. Reforms to foster a more competitive and innovative business climate were slow, and they often weren't the priority of policymakers. We did have, and apologies to our tourism leaders on the panel, we did have an over-reliance on tourism and worker remittances as sources of foreign earnings. Certainly they are important in the mix, but we over-relied on these two sources. And overall, a strategic approach to expanding trade was lacking. We had knee-jerk reactions like rejecting a continuation of GSP+. We didn't really forge FTAs. We didn't really think about how our trade and export strategy fits in with the broader macroeconomic framework. Then we also had tax incentives that were overwhelmingly favored on domestic non-tradable investments. If you look at the controversial Strategic Development Projects Act, which I have come out very clearly saying that we should have frozen it, respecting the agreements already done, but freezing it for no further investments, given how problematic it is and what a drain it is on the exchequer. If you look at the list of projects in there, they are predominantly mixed property development projects. You don't see any truly export-oriented manufacturing that connects us to global supply chains. Para-tariffs protected domestic manufacturing with little evidence of whether that had actually helped some of these industries mature, or whether there were impacts on consumer welfare as a consequence of it. And if you were a business person, a chamber leader, a think tank, a professional from OPA, and you wanted to try and get policy attention in government for good ideas, for a lot of smaller ticket reforms that could have added up to larger opportunities, you probably wouldn't have got that policy attention, because that policy attention in post-war Sri Lanka was largely on a few big ticket projects. Next, please. So I'm going to give you 4 charts that give us a hint for what some of this problematic growth model was, specifically looking at trade and investment. So if you look at Sri Lanka's debt service to export ratio, that is, you have export earnings on one hand and foreign debt servicing as your numerator, you can see that this debt service to export ratio was rising. The next is, can I use this? Yes. Okay. Oops, I think I'm giving you a glimpse of, can we go back? Back one more. Back one more. Okay, so I'm taking the time pressure literally, I think, by skipping ahead slides. I apologize. Sri Lanka's trade to GDP ratio. Sri Lanka's trade to GDP ratio, which indicates how much of our economy is being driven by international trade. This is an important metric for a country that is a small 21 million population, does not have a large domestic market. So trade to GDP ratio is now at levels below our first opening up. You can see some spikes. The first spike is post-1977, but that reform momentum wasn't maintained because we didn't have other complementary reforms coming alongside it. You see that second uphill, which is the post-1990 kind of reforms, and then you see these declines coming alongside the global financial crisis, and then that secular decline continued. So trade is forming a smaller part of our economy over the years. Exports as a share of the economy has declined. You can see that for a country that talks a lot about exports, again, exports as a share. Earlier we looked at trade as a share. Now exports as a share of our economy has been in secular decline. Within that exports, and this is particularly important for a country that's looking to go from lower middle income to upper middle income, we need to improve the technology intensity of our exports. Medium and high-tech exports as a share of our total manufactured exports have stagnated. Another way of looking at our export composition is through this wonderful tool called the Atlas of Economic Complexity by the Harvard Center for Economic Development, the Growth Lab. So essentially, this is a picture, some of you may have seen it before, a picture of our export basket. What are we producing? This was Sri Lanka's picture in 1995. You can see very recognizable sectors, like all of it in green is the textile and clothing. In yellow is primary products, tea and so on. And you see a little bit of rubber products. You can barely see any higher tech exports, electronic parts and components and so on. Fast forward to 2021. Has the picture changed much, or does it look quite similar? Let's look at that same transformation over that period for some other countries. In that 2021 period, in the earlier stage, sorry, I need to use this. In the earlier stage, for all the countries that I'm showing, their basket in 1995 looked quite similar to Sri Lanka's. But if you fast forward to 2021, Vietnam's basket is completely transformed and unrecognizable. Thailand's completely transformed and unrecognizable. Malaysia's completely transformed and unrecognizable from the past. Bangladesh, still the same, and often, even as a latecomer to industrialization, has a similar basket to ours, and perhaps that's part of the reason why the jobs pressure came in and we saw some of the crisis recently. Another part of this is FDI. We know that for a country like Sri Lanka with a relatively low production base, we need to attract FDI, particularly export-oriented FDI, to plug us into global supply chains. The graph on the left, I've only colored in green Sri Lanka. You can see Sri Lanka's annual FDI inflows, low compared to many of our East Asian and South Asian peers. On the right-hand side is those FDI inflows. You see a huge spike when we had that inflow for the Hambantota transaction. Apart from that, fairly unimpressive post-war FDI performance year on year. And FDI inflows as a percentage of GDP shown at the bottom. So post-war increases were mainly in the domestic non-tradable sectors. Manufacturing FDI in particular was flat. Mixed property development and housing FDI soared. And our incentives regime, particularly the fiscal incentives regime, was often unpredictable and often non-strategic, even though we ostensibly have a so-called Strategic Development Projects Act. I would argue that our incentives regime was unstrategic. Another aspect which affects our businesses even before they get to a foreign market is procedures at our border, procedures with our government regulatory entities. And now we have a global agreement that Sri Lanka has committed to in 2017 to improve those procedures, along with 120 plus other countries of the WTO, and that's the WTO Trade Facilitation Agreement. Now, there are three types of category commitments which countries listed out. Category A was all of the things that a country would do when the Trade Facilitation Agreement comes into force. Category B is, we need a little more time. Category C is, we need a little more time and money and technical resources from donors. So category A really is the most basic stuff that we ought to do for our traders, but also had committed that we can do upfront. If you look at Sri Lanka's rate of implementation of those basic category A commitments on trade facilitation, we are at just 25%. Compare that to 100% achievement by Singapore. I put UAE there mainly because of some of the efficient ports and borders. 97%, Malaysia 94, Thailand 91, and so on. So Sri Lanka's commitment to making it easier for our traders, and often I would argue that some of the reasons some businesses are averse to free trade agreements and deeper trade integration with another country is not because they don't actually believe that it's good, but it's because they face so many difficulties here at home that they feel that paratariffs are a good way of balancing out the scales. Within trade facilitation, one of the things that our businesses, many of you have probably heard of, is the National Single Window as a priority digitalization effort to connect all regulatory agencies at the border. That's Article 10.4.3, and Sri Lanka actually, among these countries, has actually pushed out the implementation of that to the longest. 2030, we have now revised the timeline and said we will only do this by 2030. Look at all these other countries. And I actually did not believe this data from the Trade Facilitation Agreement website. So I went to each of these individual countries to look at whether they actually have a single window and how functioning it is and how their traders talk about it. And it's true. All of these countries that have said they have implemented it and given the notification to the WTO have done it. Indonesia, Malaysia, Singapore, Pakistan, Thailand, and so on. Another aspect of our export agenda and a trade promotion investment agenda, which is relatively underexplored, is the role of our commercial representation abroad. We had a program with Professor Matt Andrews from the Harvard Kennedy School. I think Murtaza will remember that program. It was all about commercial diplomacy. How do you leverage your network? It's like you are a bank and you have this branch network globally. How are you going to leverage that network to drum up new business? That's commercial diplomacy. And international empirical evidence has shown that commercial diplomacy increases trade, especially the extensive margin, which is the variety or the basket of our exports, less so than the intensive margin, which is the volume. That evidence has also shown that it helps SMEs more than even larger firms. This global commercial representation that is our marketing department essentially for trade and investment and exports has some major gaps. If you look at our key trade partners, both import and export, key bilateral trade partners, 9 of Sri Lanka's top 25 trade partners, we do not have a commercial representation. Within trade, you look at exports specifically, the current status. 11 out of the top 25 countries with the highest total exports in a period do not have commercial representation. Some don't have a post, some have a post, but it has been vacant. let's look at export potential. What's the prospective opportunities? There's a tool called the ITC Export Potential Index. If you map what countries does Sri Lanka have a great potential of increasing its exports to, 7 out of those 20 countries do not have active commercial representation. This is another aspect we have to look at. I'm coming back to the national single window point very quickly, just to articulate that this is something that we have gone back and forth from time to time. The World Bank has submitted its blueprint. We have a final report on the operational models. We have a website that was launched by the Ministry of Finance. Interestingly, that website was launched in 2019. It still exists today. Very confusing for traders because it's called nationalsinglewindow.gov.lk. It lists 3 regulatory agencies: Standards Institution, Plant Quarantine, and Department of Public Enterprises at the Treasury. It still contains a speech of the launch from the finance minister at that time. And the listing out of services are basically just definitions. Imagine that. Definitions for what paperless trade is, definitions for what security is, definitions for what integrity is, not really the services. Then there was a cabinet decision 2 years ago to restart this national single window. And in that, interestingly, some of the officials who were interviewed, who were supposed to be in charge of it, say they have no idea who's handling it. And next, most recently, we see an awareness session around trying to rekindle this whole exercise, which is a good thing. But ultimately, the date we have committed to is 2030. So again, for me, this is a high priority area which does not require grand new legislation, grand new regulatory reforms. It just requires policy attention and commitment. And part of the problem is we probably don't have enough accountability for this trade and export agenda. Tourism, which brings in 1.5 to 3 billion, depending on the year, and worker remittances, 4 to 5 billion annually, have full-time ministers. Well, they did. Whose cabinet level responsibility is international trade? We had a short period during 2015-2018 where we had a Ministry of Development Strategies and International Trade. Many reforms were initiated, but unfortunately the ministry didn't continue. Exports are 17 billion compared to those other inflows. We have a visionary Export Development Act of 1978 by the then Minister Lalit Atulathmudali. Visionary, I say this because I do work with the International Trade Center in Geneva that works with many countries. They also say how visionary this act was for its time. But unfortunately, the act and its bodies, for example, the EDB, have unfortunately lost its luster over time. And at one point in the not so distant past, the EDB was under the same ministry as the State Trading Corporation and SATOSA. Now we have a new legal and institutional framework, and there are many hopes pinned on this, the Economic Transformation Act, with new bodies like the Economic Commission, Invest Sri Lanka, Zone Sri Lanka, and so on. It even contains a target for export to GDP ratio as a KPI with periodic reporting to Parliament. But of course, these are new bodies which will require new skills, and this is probably where OPA can also look at supporting. It will require a whole set of new skills and new people to come in, not just from within the government. In the remaining time I have, I want to focus on a few strategic considerations for Sri Lanka, moving on from this. Clearly, the priority focus on trade, exports, diversification, and export-oriented FDI is very important. We must remember that the root causes of our crisis did include the lackluster performance of these areas, not only around taxation and debt. In my view, yes, fiscal and monetary policy reform is necessary but not sufficient. We need industrial policies. Don't get scared by the term industrial policies. It's not like the past where it was about picking winners. There's now a whole bunch of new, sophisticated, curated, nuanced tools around industrial policies, structural transformation policies. Improving trade competitiveness, boosting FDI, and diversifying exports with innovation will require a strategic approach. We did have an effort at that, and we need to double down on those things. There was the Sri Lanka National Export Strategy, the Innovation and Entrepreneurship Strategy. These were forms of industrial policy. It had a sector-wise focus horizontally, not picking winners. It aligned and linked the innovation ecosystem with the export diversification agenda, with the FDI promotion agenda, and the SME exporter upgrading agenda. Nicely interlinked to truly transform that export potential. And remember, a lot of countries that have successfully done export transformations have adopted these strategic approaches. Samsung was a noodle maker. Now they're making smartphones. They started off with licensing technology from Japan. The government got involved with public education, public investment in STEM education and R&D. In Chile, Chile's salmon industry export is now famous because of what Fundación Chile did with technology transfer from Norway, linking the technology innovation to domestic manufacturing domestic production in order to export. Penang Export Hub in Malaysia, one of my most favorite examples. They established a Penang Development Corporation with private sector expertise, where the state minister of Penang was deeply involved. They linked multinational enterprises with SMEs. They undertook strategic investment promotion efforts where they took established businesses, foreign investors to go with them abroad and speak fondly of their experience in Penang. They had a PPP approach for skill development because at one point, those electronic firms in Penang were about to leave, saying, we're having a skill shortage here. If you don't fix it, we're out. So they partnered with the government to develop a whole program of improving skills. So this is what I'm talking about in terms of deliberate policy actions. Economic diversification, transformation doesn't happen automatically. There are shifts in global supply chains due to geopolitical considerations, which Sri Lanka must look at. I don't have time to go into this, but read up about the shifts happening due to, for the first time in a long time now, trade shifts are being influenced by national security considerations and geopolitical considerations. A good example is the EV supply chain. And finally, Sri Lanka has to embrace, we cannot ignore this link between environment and nature in trade. There are more trade agreements now that have environmental provisions than they ever did. Buyers in our key markets are becoming more conscious about climate impacts, traceability, and so on. Countries and regions that we trade with, like the EU, are taking much more activist domestic policy measures to deter poor environment credentialed products from entering their market. The EU Green Deal is probably the biggest form of industrial policy in the West, probably on par with the Inflation Reduction Act in the US. They have a carbon border adjustment mechanism, which might have less impact for us. The EU deforestation regulation, which might have some impact on us, and the Corporate Sustainability Due Diligence Directive, which will have an impact on us, but some of our companies are actually well placed to take advantage. CSF, we have an analysis on this coming out, so I'll look out for that. And finally, doing these reforms matter for our future, and we must do them not because they're part of conditionalities, and many of them, these don't feature in some of our post-crisis policy frameworks that international partners tend to put forward. We have to do these because these are good for our businesses, our citizens, to grow our resilience and our people's incomes. And I'll end with a positive note as to why we need to do more of this, because there are bright spots in our economy that signal what is possible. These bright spots show that Sri Lanka can. If people argue we should skip over, forget about supply chains, forget about manufacturing in Sri Lanka, skip ahead to services only, these are just some of the examples that show we can. We have a leading sales manufacturer for in the water-based sports segment, an example of really playing in a niche and high quality. We have aircraft sensors being developed for Airbus and global aircraft manufacturers, recently acquired by a US firm that actually now has started doing sensors for autonomous vehicles. We have apparel manufacturers here who are not just making lingerie, who are making technical clothing. For example, for esports athletes, gloves to reduce injury, increase the speed of their recovery time, and help them perform high-performance competitive gaming for longer. Our apparel companies. We have impact sensor harness manufacturers who are producing to 1 part per million quality standard for global automotive firms. 0 defect. We have a legacy tea company that has partnered with a German botanicals giant to create flavor extracts from tea to serve the beverage, food, and phytopharmaceuticals industry. And we have Sri Lankan young entrepreneurs who are really getting on trend with global consumer preferences, like the export of plant-based foods, including vegan meat alternative products. These are examples of what Sri Lanka can do, and we owe it to these companies and those that are yet to come by doing the necessary reforms to improve our trade, export, and investment performance. Thank you.
Thank you very much, Mr. Anushka Wijesinha. I think you explained everything in detail. If you have any questions, please send it on the QR code that was mentioned so that then we can take it up during the question time. So I will now invite Mr. Murtaza Jafferjee to speak on the topic of In Search of Capital. Mr. Murtaza Jafferjee is one with great experience. He is a Chief Executive Officer and Managing Director at JB Securities Private Limited. Over to you, Murtaza.
How do I change it?
Okay, thank you. Till I get the clicker, I'm substituting for Suresh Shah, who has got the flu last evening. And it's a very open-ended topic that I was given, In Search of Capital. So I spun it in what I believe it is. Some of you are familiar faces. You may have heard my pitch basically, but certain things are worth repeating many number of times because I believe that it is important. I'll speak fast. If you want to clarify something with me, I'll hang around for a moment. Okay, maybe you can change it for me, right? So I gave the front page of a book that has quite influenced me called Gambling on Development. It was written by an economist called Stefan Durkheim from the UK's Development Agency. And what does he have to say? Next, please. So what he says is that there is something called an elite bargain in any society. So any country is run by an elite. It's a group of people, and I have always said this, that this country is run for the benefit of 1,000 people. This elite basically cuts across different segments of society. It can be part of the political establishment, business establishment, religious establishment, military, judiciary. And it is this group of individuals who basically determine the outcome of a country. And what the elite bargain is that do they bargain on gambling on development, which means that do you make the pie bigger? Or the alternative is that you have an extractive regime, that the elite capture power and basically extract out what they can for themselves, so that the pie basically does not grow, in fact it contracts, and all of us get left something much smaller, and that's a recipe for disaster. Some elements of that have been happening in Sri Lanka, which is the reason we are in this state. Next, please. So the development bargain has 3 elements in it. So the elite basically come together to determine basically how they are going to develop the country, right? The second is that it is the capability of the state. That in our particular case, state capacity is very weak. So in that context, to have a state-led development model basically is an oxymoron. So therefore, you have to decide what the state can do and what it cannot do, and focus on things that it can do. And then the most important thing is, if you go to the Kennedy School at Harvard, which is the foremost school on economic development, when they even talk about the story of Singapore, they say they made a lot of mistakes. But they were willing to learn from their mistakes and pivot. So as Einstein said, repeating the same thing over and over again, expecting a different outcome is a sign of insanity. So you need to have a learning state. Next. Now, the problem is that we have, now what are the challenges for Sri Lanka? And this is a bit of algebra here, but it's important for me to explain this. We have a lot of debt, right? That's why we went bankrupt. Now, there is something called the debt sustainability analysis, which tries to forecast the trajectory of your debt. So, you have a numerator and you have a denominator. The numerator is the debt. The denominator is the growth, right? So, ideally, basically, you want that debt to GDP trajectory to come down. At the height of a crisis, our public debt to GDP was 128%, right? So what drives the numerator, the debt? One is the interest rate on the debt. So if you have very high rate of interest, then obviously that debt is going to grow like compounding. The second thing is if you are running what is called a primary balance deficit, which means revenue minus expenditure, you need to borrow to finance your budget basically. The third driver is basically to do with the forex composition of your debt. How much of it is in local currency, how much of it is in foreign currency. The numerator is the growth, right? So if the numerator, which is the debt, is growing faster than your GDP, especially in a situation where the debt is greater than your GDP, basically your debt becomes totally unsustainable. So this algebra tries to break down all those factors into some kind of attribution and see what is contributing to the growth of your debt. Now, the only way that Sri Lanka can come out of this issue that we are in is we have to grow the economy. Not only do we have to grow the economy because we have to try to outpace the growth in the numerator, which is the debt, but the taxation, which will drive the primary balance, is highly dependent on growth and what is called tax buoyancy, because a growing economy will provide more taxes. Generally, if your tax buoyancy is positive, your taxes will grow faster than your economy. And for the simple reason that when an economy is doing well, people will buy discretionary products, people will earn higher income, companies will make larger profits, etc. So the tax revenue will come through, right? Next, please. Previous. So this kind of shows you that algebra, what has been contributing to the growth of our debt. And you may not be able to understand this graph, but for example, when you grow, that pulls down your debt to GDP. But if the interest rate is very high, adjusted for inflation, your debt is going to grow very fast, right? If you run a primary balance deficit like we did 2 years ago, which was almost 6% of GDP, you are adding 6% of GDP to your debt. Now, next please. Now the IMF previous, the IMF, next. The IMF basically has, next please, the IMF has done what is called a fan chart. So they have a base case trajectory of which way our debt to GDP is going to go, and this fan chart shows a probabilistic way of potential outcomes, right? So as you can see that as per their base case, the debt to GDP will come down, but it is coming down extremely slowly. But as the fan chart is showing, the probabilistic situations are that it can also increase, right? Because there is no certainty, there's a lot of variables that interact, right? Next please. Now the problem is we have a lot of debt and the debt is at very high interest rates. So if you adjust for inflation, where inflation is running at 2.4% and expected to below the central bank's outer bound target of 3%, your real interest rates on your debt is very high. So in this debt sustainability, there is something called R minus G, right? R stands for the real rate of interest rate and G stands for growth. So what you really want is your growth to be greater than your real interest rate. But what happened is when we had the debt restructuring, we had out of our total bond holding at that time of about 9 trillion, 1.9 trillion were bonds that were yielding 27%. But when it came to the restructuring, we didn't restructure all those bonds. And the superannuation funds of all the bonds had 43%, but they only held 22% of those high yielding bonds. We exempted everybody. And I have publicly gone on record that it was the greatest wealth transfer where 200 families benefited from this. The people who bought these instruments never expected to continue to enjoy these 27% rates of interest. Some of these only mature in 2032. So the country is carrying a lot of debt, right? So the existing debt, which is at about 10%, is also very high. But when you have this small component which is at 27%, I have estimated this year alone we have left 250 billion rupees of extra interest on the table. Our total interest bill is about 2.25 trillion. Next please. So, next please. Now the problem is, with inflation down, our real rates of interest are very high. Right? So think about it, that your government securities, we are issuing longer term government securities at about 12%. Your rate of inflation is 3%. Your real rate of interest is hovering around 9%. No country can afford to pay such high interest rates. Of course, this is at the margin. All the debt is not coming at that. But this is adding to it. Next, please. Now the problem is your growth has stalled, right? If you look at the bottom graph, since 2017, it will take till 2026 to go back to the same place we were in 2017, right? So it's like the lost decade. Next. Now the thing is, what is complicating the issue is something good we did. We created a new central bank law. And the central bank law says the primary focus of the central bank is going to be price stability. So if this governor and the monetary board is allowed to do their work, hopefully they will keep inflation within the target rate of 5% plus or minus 2%. Next. Second thing is there is an explicit prohibition for monetary financing, which means that the government cannot finance, the central bank cannot finance the government's debt. At the moment, the central bank owns about 2.5 trillion of government debt. But over the next 14 years, that will wind down. Next. So what that means, next please. Next. What that means is that you will have to finance this massive amount of debt from the marketplace. You can't inflate the problem away. So most people are worried about the Sri Lankan rupee at 500 rupees or very high inflation. If the central bank is allowed to do their job, I believe that is a problem of the past. But our problem is going to be with this enormous amount of debt, we have very high real interest rates. And how do you grow the economy? Because when you have very high interest rates, investing becomes very challenging. Right? Because if you do a simple NPV analysis, you're not going to go over the hurdle rate of return because your real interest rates are very high. And this is an explanation of what has happened in our economy over the last 3 years. The sectors that are below the x-axis are sectors that have degrowth. Construction being the biggest contributor. There has been a massive contraction in construction, which used to be about 10% of our economy. The sector is coming back. Next. We got lucky. This is a proxy for rain. We have been very lucky. You simply look at the dark blue, right? And if you look at 2016 and 17, dark blue is very low because we had 3 back-to-back droughts. But towards the last few years, we have been lucky with the rain. If the rains fail, We have a huge weather shock coming our way. Next. This is a simple economic equation which says that your current account which you are driving is because of a savings investment gap, right? It is not, as people think, that because we don't export enough. That's a complete myth. The reason we run these huge current account deficits is we consume too much, we invest too much. So in an environment where you're going to have very high real interest rates and you're going to have fiscal consolidation of a primary balance surplus, it is highly likely that your current account is going to go into a surplus, which is next. Next, please. We have roughly 60% of our GDP in net external liabilities. 60%. The IMF has told us over a period of time, you have to get 60% down to 30%. Next, which means that we were running very large current account deficits. We have to be running a current account surplus of about 1% of GDP. Now, what does this mean? This simply means that you cannot import capital. You cannot live beyond your means and fund it by overseas borrowings. You have to now pay down your borrowings. All of these are now indicating you are carrying a lot of debt. Capital is going to be a shortfall. And the essence of my argument is the quality of capital matter. It is not quantity but quality. And quality matters when you have people who care about their money. So you want not only money, but you want people who really know how to get a return from the money to come and invest in your country, both local and external. Next. So the corollary here is real interest rates will be high. Next. Now the only way that we can get smart capital and to grow our economy is we have to focus on productivity, right? Because we are not going to have factor accumulation where you have a lot of labor supply coming and you have a lot of imported capital. That was the growth model of the past. Today the growth model is productivity. And the fundamental problem with productivity is competition drives productivity because that creates the motivation to improve. Now remember, I started my presentation with the elite bargain. If your state is captured, they will resist competition because you have a rent seeking class. They want to entrench yourself. So the only way that you can have competition which will drive productivity is you have to completely open your economy to competition, which means on the trade side, you have to reduce the barriers against trade. And domestically, you have to, where there are non-tradable sectors, you have to have pro-competition policies. Next. We have an aging population. So we are not going to benefit from a tailwind of an increasing age cohort who are in the economically active age. It is still increasing, but we don't have India or Pakistan or Bangladesh's demographic dividend. We have already used it up. Next. We have a lot of females at home. We need to bring them back into the labor force. Next. I don't know how many of you have read the Constitution, but look at section 27. It is the directive principle of state policy. At 27.2.f says very clearly that the resources of the country will not be concentrated and centralized and in the hands of a privileged few. Our Constitution is saying that you should be pro-competition, but the policies that but these are not binding. Right at the end of 27, they say these are not binding. It's like a feel-good para there. Next. Having the government in business and controlling capital is a bad idea. Next. They should set the rules. The players should be in private hands. Next. Next, please. Next. Sending SOEs into private hands is not wrong, because don't forget that the government retains 30% ownership in every business in Sri Lanka through the tax system. The taxman is a partner in every business. So this concept that you are selling the family silver is all wrong. Next. Next. I want to say a quick word about tax incentives. Tax incentives is not the way to get capital. It's a complete myth. Next, please. Next. A survey was done by UNIDO in 2011. The item that I have highlighted shows amongst all the other concerns that they have, incentive packages is number 8 or 9. And we believe that it is tax incentives that will get investors into Sri Lanka. That is a complete myth. Next. If you use the NPV framework, what matters is the magnitude of cash flows and the uncertainty of both the magnitude of the cash flows and the timing. If you can reduce those uncertainties and the magnitude of the cash outflows, you can significantly improve the returns. And I have shown an example next of a solar project where I have invested in. Right? If the tax rate is 30%, the IRR in this example is 22%. If the tax rate is reduced to 15%, half of it, the IRR goes to 24%. But if you can execute the project instead of 12 months in 6 months, the IRR goes to 25%. So the point I'm trying to say here is, if you use the NPV framework, there are a lot of other levers that can be pushed, and the tax is a last resort. Next. So I have run out of time, but the essence of my message here is Sri Lanka has an issue in the way our state is run, and hence whatever government comes, that if the elite bargain is to develop the country, then they are setting the foundation for good investment which will attract capital. The second is the Sri Lankan state is carrying a lot of debt. The debt restructuring that we did was very light. Right? Therefore, capital is going to be expensive. You will have to ration capital. And all capital is not the same. What matters is not the money, but who is behind the money. The most important thing, I've been in the stock market for 30 years, you want to be on the side of owners who are interested in their money, because they control the firms. They will put in place all the checks and balances and the incentive structures to get the return on capital. If you believe my thesis here, government is a terrible allocator of capital. It is not suitable for that. Right? And if we are getting foreign capital, especially for export-oriented economies, there's a lot of other things that we have to do, where I have run out of time, like industrial zones, etc., that can reduce the uncertainty. Thank you.
Thank you very much, Mr. Murtaza Jafferjee, because especially speaking on the debt and of course the importance of capital. So if you have any questions, because I've still not seen any questions coming up, kindly send your questions via the QR code. Now for our next topic is on investing in human capital to attract FDI. We have Mr. Dinesh Weerakkody, Chairman of the Board of Investment of Sri Lanka. So I would now kindly invite Mr. Dinesh Weerakkody to make his presentation. Over to you, Dinesh.
So good morning, everyone. Good morning. Can we have some energy here? Good morning. Thank you. Thank you. So what I want to do is we ran a massive human capital summit last month, and we had about 700 participants, 65 speakers, and we got former Prime Minister from Australia to do the keynote. And there were some great findings, but we developed a very valuable video clip for this summit. So I like to start with that because that sums up a lot of the issues that we have currently in Sri Lanka. Can we have that video?
Sri Lanka, a land of beauty and potential, stands at a pivotal juncture in its economic journey. Our greatest asset is our people. To elevate our nation, we must invest in human capital. Achieving sustainable growth requires a strategic focus on developing our human capital. Inclusivity and innovation are key. To achieve we must look at navigating complexity and urgency, building a resilient export economy, analyzing current state, alarming HCI statistics. We face a complex intersection of technological disruption, environmental stewardship, and social equity. Our competitive edge lies in nurturing a skilled global workforce. To thrive globally, Sri Lanka must build a sustainable export economy, fostering talent, entrepreneurship, and digital transformation. Our human capital index has stagnated at 0.58 since 2012. We must recalibrate our education and empower our workforce. In 2016, we gathered key insights at the Human Capital Summit. These ideas form the seeds of our transformation. As we gather for the 2024 summit, we focus on nurturing, harnessing, and amplifying our human capital. Our approach prioritizes 5 key pillars: public sector capacity, information technology, tourism, financial services, and startups, enhancing public sector capacity to serve a dynamic and growing economy, advancing our IT sector to be at the forefront of global technology, boosting tourism to showcase our culture and natural beauty, strengthening financial services to support economic growth, encouraging startups to drive innovation and job creation, prioritize STEM education, skills alignment, digitalization, diversity and inclusion, and engaging the Sri Lankan diaspora. Focus on competency development, industry-academia collaboration, and upskilling and reskilling. Ensure competitive compensation, improve quality of life, professional growth opportunities, attract global companies, support startups, strategic tax policies, and build a vibrant research landscape. Together, we can unlock Sri Lanka's economic potential by building a future-ready global talent pool. Let us ignite the flames of progress and ensure our nation thrives. Welcome to the 2024 Human Capital Summit. Witness the journey of transformation in our quest to develop our human capability.
Thank you. Right. Now, to start on my presentation, somebody passed on this clip to me. What is this basically telling us? Can somebody? I don't want this to be a dead session, so please. What is this saying? I think this was even highlighted by the president yesterday. What's happening in our country? The organization of professional associations, all the top 30 or 40 associations. What is this slide telling us? Pardon? Okay. So what I'm going to talk about is how do we make turn the tree the other way, which is not an easy task, but it can be done. At least it can be done partially. So the Human Capital Summit actually deliberated on 2 issues. One was how do we retain our existing talent, and how do we get our talent to return, and also to build capacity in the short and in the medium term. yeah. Yeah. Can you go back? Right, okay. Right. So, in 2008 to 10, we saw a whole lot of people leaving the country. Right? And that was due to a security issue because of the war at that time. Then in 22 and 23, over 1 million people went out again, and that was due to two things. One is again a security issue and an economic issue. So it was all about livelihoods. And fortunately, 24, we see this situation improving. I don't have the numbers here, but I have been looking at some numbers. Things are looking much better than what it was in 23. So as you remember, 22, I think it's always good to remind what it was like in 22 and where we are now. So in 24, things are looking much better. So obviously, talent looks for opportunity, and if you don't create that opportunity, obviously, they will move. Right. So just to give you some perspective, BOI has been in existence for 45 years. Mr. Watawala has been chairman twice. We have actually only been able to mobilize about $24 billion for the last 45 years. And unfortunately, countries like Vietnam does it in 1 year. So there's something wrong in the mix. So this is something that the government actually is trying to address through the Economic Transformation Act. So despite all the challenges, we have attracted some good brands into the country, and 2023 and 24, we saw some good brands coming into the country to invest. So Mr. Murtaza raised this issue about incentives, and I must tell you that a lot of the Chinese investors, the first question they ask is about the incentives. So it's a chicken and egg. He has better insight, and he's a better expert than me on that subject. So that is something we should actually debate. Given the fact that on the ease of doing business, there's something that we don't use now, but we are at 100, I think, no? On the ease of doing business? Yeah, very poor. Right, so why Sri Lanka? I mean, one of the most important advantages we have is the location. And I don't need to read out the slides on the slide. I mean, it's fabulous, and it's something that we should try to exploit. So if you look at the bottom of the slide, it says 200 to 300 ships transit the region daily. And I think the ports have done very well in 24. Then obviously the other opportunity we have is talent. As a lot of you know, Sri Lanka has the largest pool of accountants outside the UK in Sri Lanka. And of course, one of the challenges we have is to retain them. Many of them within the 6 months of qualifying try to migrate to Canada, Australia, or New Zealand. So that is something that we need to focus on. And we also produce a lot of good lawyers, and I think the government is making a huge effort to attract legal BPOs to come and set up in Sri Lanka. So that's something we have been talking to the legal profession as well. And then the quality of life. I know a lot of I'm on to multinational boards, I know a lot of those CEOs who come to Sri Lanka, they like to stay once the contract is over. So the lifestyle and the opportunity is fantastic in our country. So I think that's something that we need to push on more. Then the last factor there is the market, the access to markets. So recently we signed the Thai FTA as well, and they're looking at a few more. So that is something also that we need to focus on. These are some just statistics about the Sri Lanka talent pool. I mean, it's not fabulous, but some interesting data. It's a very powerful slide because it conveys a lot. So one of the issues, these numbers are a little bit outdated, but I think it's about close to 1 million now. So we have a serious labor shortage. And So this has been amplified by the recent migration in 22 and 23. So as we discussed at the Human Capital Summit, we had to find ways of retaining our top tier talent, at least the B talent. I'll share these slides, so you don't really need to take pictures. And so this is something that the Human Capital Summit deliberated, and we are coming up with a report which will be presented to the government on how to address these two challenges. So labor force growth is slipping. So I like to ask this question: why are we facing a labor and skill shortage? We discussed it earlier, but so I think this slide answers a lot of these questions. So I think we need to put more focused efforts into some of these areas in trying to drive up the numbers. So this is a very, very interesting slide which is discussed over and over again. I think the worry in this slide is the dropouts. But what do we do with them? So we have been talking a lot about increasing the intake into the universities, but one of the issues we have is that it's more or less supply driven and it's not demand driven. So I think we have been talking about it for the last 25 years, but still we have not addressed it effectively, right? So to me, as a private sector executive, I think one of the biggest issues we have is we are not investing enough in the tertiary education sector. As I pointed out earlier, about 350,000 drop out of the system. And though we have about 180, 190 vocational training centers, I think not even 25% of them are effective. I think the hotel school has really more or less got its act together. I think they need to have better collaboration, because the tourism sector is one sector which is actually taking off, and it needs good talent because many of them have moved out. Right. So this is something that I keep asking myself. We keep saying that we need to spend more on education, but I think we spend more than double on defense. So this has been discussed several times. So I think we need to smart size the military also. And my next slide will show you that I don't want to even talk about it. I think you can see defense expenditure as a percentage of GDP. So these are something that Mr.Murtaza and all can maybe debate and discuss. Right. So this is actually some data from the private sector. So what they are basically saying is the people we produce are not keeping up with what the requirements of the private sector, and also the new skills that are coming out. The vocational training engine is not geared to meet the demand. So what I'm saying is we need to, even though we are putting more money, we need to invest it wisely. So I thought I'd share with you two interesting slides. So this is a question that is always being asked at chambers and all: are graduates readily employable? So what's the general view in the room here? What's the general view in the room? Yes or no? Okay. Right. So these are some of the issues highlighted by the employers when we did our survey. So I thought this might be very useful for employers, people here who recruit people, and also who are policymakers. So what employers are saying is they want better prepared graduates who have also seen the industry a bit. So I think there is a lot of learning from the German model. I know some of you have discussed this also. So the guys who say yes, they are employable, so these are some of the positive attributes that they highlight. So, and you talk to the graduates, undergraduates, what they keep saying is give us placements in the industry. So there again, some of the companies have reached out, but a lot of the companies are still not ready to support this. So I think, again, I like to repeat, the German model is something that we should seriously look at. So we took this one step further and asked young people between the age group of 19 to 24, what are the sectors you would like to join? As employees, I think this is a very useful slide. And what do you look for in a job? Right. So banking came in number 1 and technology. So as you can see, government, despite not recruiting, is still a popular place for graduates to get in and young people. So for recruiters, this is a very useful slide. Right. So this is a very interesting slide. What do they look for in the job? I'm not going to repeat it. And I see mobile phone number 3, perhaps that's why we have about over 12, 13 million connections in this country. And something that I've seen popping up is training and education. A lot of employees are looking for training and development within the workplace. And I think a lot of the employers need to rise up to this. So basically some good news, I think more and more people are, getting into the A-level stage, which is a positive thing. This data is not... Okay. It's a wake-up call, actually. Okay. So it's telling me to get into the solutions. So basically, the Sri Lankan market is high expectations in terms of salaries and career. If you think that employees are not looking for salaries, competitive salaries, productive jobs, then you are mistaken, right? So there are a lot of skill gaps. This is again a survey that was done last year in risk management, supply management, waste management, HR and advanced technology. We still don't produce top-class HR professionals in this country. We need to keep upgrading. And as I discussed earlier, the best talent continue to migrate. So we need to create that USP that will help us to retain them in the country. So I didn't need to explain this. So these are some global salaries, and I don't want to talk about Sri Lanka. So people are looking for more productive, well-paying jobs. All of you know what's the average salary. So these are what is being paid in the region, the average salaries. And of course, English. You can see where we are. And as Murtaza highlighted earlier, we are actually we are going to have a serious problem with our talent by 2050. So we need to start working on it now. So a lot of retraining, distance learning, adult learning programs. So people like Professor Watawala and all will have to start focusing on retraining people, the retirees, like in Japan and Singapore. So just one thing before I close. So people keep saying, if you're short of talent, let's go and bring them from outside. Right? So we have had a history where, for example, BOI company, Sport City also, will selectively give visas for professionals and technicians to come into Sri Lanka. So what is the policy? We don't have a policy. For example, a lot of the markets like Singapore and all have good policies. So I think we need to come up with something. Because even the Board of Investment or the Port City, they need to work within a policy, a national framework. So that's where the OPA can actually play a important role. So my takeaways, sorry. It's very slow, the machine actually, okay. So my final slide, my takeaways, obviously Sri Lanka is facing a labor skill shortage. So how do we address that? We have a couple of solutions, how effective are they? So we need some kind of collaboration between industry, the chambers and professional associations and government to find a proper working solution to that. Then training, companies need to invest more in training and making sure that people are employable, right? Are we doing that adequately? Some of the big companies are doing, but some of the smaller mid-sized companies need to do a little bit more, right? We need to show them the return by doing that. Then STEM education, we have been talking about this for a while. So this is where the money should go in, right? Somebody needs to address that. Then like I discussed earlier, foreign workers, if you are bringing in foreign workers, we need to have a proper strategy and a policy. And then finally, we need to find a way of bringing back our talent. And now with the new business models and working models we have, we can actually get people to work from overseas. So what is the model for that? And how do we compensate them? Right? And my final message is, I think if industry, professional associations and government don't work together, we'll continue to talk about the skill shortage and the skill gaps and the supply from the university system. So the time has come to address it because other markets are accelerating and we will be left behind. Like I said earlier, 45 years we have attracted only $24 or $25 billion. Vietnam does it in 1 year, right? So I think we need to tweak our model and the time is right for that. So thank you very much.
Thank you very much, Mr. Dinesh Weerakkody. I think very important areas on human capital and how professionals can help, because I'm happy that he has mentioned the term professionals, because nowhere in the university education, in the UGC or wherever they talk of professionals, they only talk of university education. But you spelled the importance of professional education. I'm sure that you will put that to the right authorities in order that they can take action. So we now have a panel discussion. I've asked you to send your questions. First of all, we have two other panelists here, Mr. Thisum Jayasuriya, Chairman, Sri Lanka Convention Bureau, and Mr. Chalaka Gajabahu, Chairman, Sri Lanka Tourism Promotion Bureau. So first of all, I will ask Mr. Chalaka Gajabahu, because tourism is a very, very important area, say within about 3 minutes, to give his view and what they are doing to promote the tourism industry.
Thank you very much, Professor. It's a very important subject. I think His Excellency the President also spoke about tourism last night. It's a recovery that we have made, especially after the economic crisis we had in 2022, whereas, of course, all the other countries went through the COVID pandemic, but unlike in Sri Lanka, all the other countries didn't have an economic crisis. Due to this economic crisis, Sri Lanka faced a big red alert all over the world. All the travel advisories went up in a big way. A lot of people, especially in Europe, Americas and the Australias, people were told not to come visit Sri Lanka because of the security issues, because of the fuel issues, the medicine, and the food crisis. But we managed to recover that very fast within 2 to 3 months after we took over. But the thing is, we were not bringing goods into the country. We were bringing people back into the country. How can we bring people when there's a red notice on the country? You know, when all the leading networks were showing negative media, since it's easy to market negative media because positive media they don't show. You can't show empty petrol queues or empty medicine queues. There were no queues after 3-4 months, 2-3 months, I would say. So, but all the networks all over the world, they didn't show that. So what we had to do was to recover. We did a campaign which a lot of people don't. It was the Seeing is Believing campaign. It was not a materialistic campaign. It was bringing influencers into the country. In the past 2 years, we have brought over 200 key influencers from all over the world, from key markers, including people like Nas Daily, Tom Cook, a lot of other people, you know, from all over the world to say that, not that to say that Sri Lanka is safe, that Sri Lanka is ready and happening. So that has worked. We have gained over 10 billion worth of free media across this, and that's why now we are in the top 5 travel rankings all over the world. If you see whether it's on Forbes, Fortune, Times of India, they rank Times of India ranked us as the number 2 destination. Fortune, I think, makes for solo female travelers to be one of the most safest destinations to travel. So these are amazing achievements that we have achieved within the past 2 years, and it was done through this Seeing is Believing campaign. Of course, we worked with the private sector as well, being a government institute. And the other thing I want to say is, because I have only 2-3 minutes to go over it, you know, you would have seen the campaign line, Sri Lanka, you'll come back. A lot of people are asking, what is this line? You know, what does it mean? Well, the thing is, we have not had a brand footprint for the past 20 years in tourism. You know, it has changed so many times when the government change or a minister change or the chairman change. But, you know, if you look at our competing markers, Incredible India has been there for 30 years. Truly Malaysia, Amazing Thailand. And a tagline does not mean that's a brand. There's a 360-degree strategy behind it. If I may allow, I think there's a concept video. I don't mind playing that for 2 minutes. For clarity, I think for the OPA, it's very important to know what this brand footprint stands for. And this is only a concept video I'm showing. Actually, the campaign is in production right now. We are hoping to launch the digital static campaign on 6th, 7th, and 8th of September. And it will be targeted on key. When the Q&A comes, I'll answer that. Can I have the concept video, please? Thank you.
Welcome to an island so magical. You'll never want to leave. Beaches so inviting. You'll return just like the waves. Watering holes so wild. You'll want another round. History so ancient, you'll need another life to take it all in. Welcome to an island so diverse and packed with authentic experiences. You'll never find another like it. And once you've bitten, you'll always be smitten. Welcome to Sri Lanka. You'll come back for more. After all, science fiction visionary Arthur C. Clarke came for a month and stayed a lifetime. Nobel laureate Rabindranath Tagore came in 1922, then came back in 1928 and in 1934. German tourist George Seelen was so infatuated after his first visit, he's come back 99 more times. Even migratory blue whales refuse to leave. It's time to tell the world about Sri Lanka. It's time to tell the world that once you visit Sri Lanka, you'll come back for more. How? By showing you what you're in for and what you'll be coming back to again and again.
I came for the spiritual spots. I came back for the wild spots.
I came for the surf. I came back to surf.
I came for the faces. I came back for the faces.
I came for the blues. I came back for the bruise. I came for the streams. I came back for the streets. I came for the high. I came back for the low.
I came for the wildlife. I came back for the wildlife.
I came for the thrill. I came back for the chill. I came for the feats. I came back for the freaks.
I came for the history. I came back for the geography. I came for the wild. I came back for the mild.
I came for the big. I came back for the small. I came for yesterday. I came back for today. Sri Lanka, you come back for more.
So that's the campaign. Can go on, can talk a lot, but we don't have much time. Over to you, Professor. Thank you.
Thank you, Mr. Chalaka. I think that will really enable us to see, most of us to go around and see about Sri Lanka tourism, in addition to, of course, getting the foreign tourists in. So the other one is also connected with the tourism sector. This is, the speaker will be Mr. Panelist, Mr. Thisum Jayasuriya, Chairman, Sri Lanka Convention Bureau. Over to you, Thisum.
Okay, thank you. For those of you who are wondering what the Convention Bureau is, Convention Bureau is the MICE arm of the tourist board. So MICE stands for meetings, incentives, conventions, events and exhibitions. So why is the MICE segment very is important? Currently the MICE market is valued at $1,000 billion and is expected to go up to $3 trillion by 2030. And I think the advantage for Sri Lanka is most of the MICE meetings, incentives and conventions are generated in our regional countries, especially India, Bangladesh, Pakistan, and then countries like Dubai. So we are in a position geographically that we can easily attract these segments. And I think currently we have improved the MICE segment, what we are used to attract. Like in the past, it was somewhere from 8 to 9%, but luckily with all the development which we have done during the past 2 years, we have increased it up to 15% right now. And the revenue we generated from MICE business is about 15% from the total earnings. And the other good thing about a MICE traveler is MICE travelers tend to spend 3 times more than a regular traveler, because they come here for a conference, and once they're done with the conference, they might go out for a meal or go out partying or do some shopping. And another good thing about a MICE traveler is that they come back more, and they bring their friends and family. So this is a very important segment which was neglected for many years, I believe. Everyone knew MICE segment was there, but nobody was actually keen on promoting it. I mean, that's one of the examples why we didn't even have the MICE category on our ETA system on the visa. So that's one of the first things that we did was to fix that. So now we capture real-time data, and we know the number of MICE travelers that are arriving to the country and how to improve this segment. So like Chalaka said, that we have come up with many new videos, like road shows. We participate heavily on road shows and do marketing strategies. We came up with first time in the history, we started in-person MICE Expo in 2023. We started in Colombo, then we went to Jaffna, then we did a few months back in Gaul. So we want to strategically promote because Sri Lanka as a destination, because sometimes foreign travelers or organizers used to think we can only accommodate MICE events only in Colombo. No, so we have showed to the world that no, we have many places in Sri Lanka that you can improve MICE, and you can show them a different part of the country. So one of classic example is, if you all know the Palale airport, it was shut down for almost 3 decades, but now we have 2 daily flights. Alliance has started with 4 flights a week. Now they are daily, and Indigo Airlines has started operations. So likewise, the strategies actually which we have followed is working, and I'm sure time to come there will be more MICE travelers visiting Sri Lanka. Thank you.
Thank you, Thisum. We will take a few questions because I think the time is very short. We've received one question that's on the export area, so I will ask Mr. Anushka Wijesinha to answer that. What are the main reasons you think we have a very low export market? We observe that there are so many barriers delaying the process.
Thank you, Professor Watawala. You know, the question asked, we have a very low export market. I think we need to, I'll use this opportunity to maybe bust a few myths. The first is that for what Sri Lanka exports today, we have the right markets. So yes, we talk a lot about our concentration in the EU and US market, but for what we are currently producing and what we can do, those markets are where it's at, and some of our exporters to those markets are actually doing quite well. If you look, however, at our penetration into faster growing new markets, especially those that have a growing middle class consumer base, Asia has the fastest growing middle class. India has the fastest growing middle class among Asian economies. So I think that is where we need to look at next about when we talk about diversifying destinations, what those destinations can be. And this is where, in my presentation, I looked at the commercial, Sri Lanka's commercial representation and ensuring that we have better alignment between that and this. The final point I would make about the barriers is that I think we need to really focus on some of the things I mentioned in the presentation about domestic behind the border barriers. Even before we look at, or alongside looking at things like FTAs which unlock markets overseas, there are a lot of behind the border barriers which our exporters face. So your costs are not just the tariffs that you pay in your foreign export market, they are also your domestic costs. There are some things that it's harder to do things about, for example, cost of energy in relation to our computer destinations, but there are a lot of other things, including the trade facilitation area, that we can do a lot of more things about, which I highlighted in the presentation. So, yeah.
Thank you, Mr. Anushka. I'd like to ask a question from Mr. Murtaza Jafferjee. You spoke on the aging population, of course, and also about the female low employment. Now, really, there are certain factors that are affecting this aging population, especially when the private sector is looking at employing these people, you know, because most of these graduates are passing out at a very, maybe not a young age, it's about 24, 25 or 26, which means you can't really maybe train them for the sort of trades that you need it. Can you just, because I feel that there are certain changes that are very essential to provide this problem, because we are having a lot of people retiring, but the younger people are wasting their time without being able to get employment early. I'm sure when you passed out, it would have been 21.
Yeah, I was a bit older than that because I was in academia for too long. So this is how I think about the problem. So you have an economically active age. So the sooner that you can be active, then you have more given years in your life. And if you can continue to work longer, then obviously you are contributing more towards the economy. So now rightfully the government has extended the retirement age to 60, because the average life expectancy in Sri Lanka is 82 for females, and I believe it's around 79 for males. So how can you afford to have people out of the workforce for 19 years? So although there was a lot of protests that the retirement age was increased to 60, actually that person's economically active age is probably 65. It depends on the nature of the work. As far as Professor Watawala's thing, if you take in India, people are 17 years when they come out of school. And for the last 30 years, I've been figuring out why are our kids 19 years when they come out of school. So then you have the issues with the university, etc. So you're right that almost 2 years of economically active years are wasted because our children are in school for too long. I think there was measure to reduce 13 years to 12 years, which is policy with right merit. Now, as far as the retirement is concerned, just because a person is 60 years in our company, they don't get retired. We have had highly active people at a senior role in their 70s. As long as they are in a condition to work, I don't have a problem, because these people are coming with enormous amount of experience, etc. If their attitude is wrong, of course, that's a different issue.
Thank you. There is a question for the tourism area. Of course, I think that is on the different areas of adventure tourism that they are talking of, adventure tourism. But I also have a question for you. This is on the really the room rates and others, which will really be able to bring in more foreign exchange. You know, they are setting high for rates, but does that also affect the tourism industry?
Very good question. I'll first talk about, you're talking about adventure tourism. Is there anything specific that they're in the question?
Which we lack.
Oh, right, okay. So, adventure tourism is huge. The thing is, when you look at the campaign, as in it's in production right now, the one-line brief that I gave to the agencies who are pitching was, we are an all-in-one capsule minus the snow. You know, a lot of people think Sri Lanka, even though we think that everybody in the world that knows Sri Lanka, they think when it comes to tourism, we are only sun and sea. We are not sun and sea. We have a 2,500 history, culture, heritage, adventure, wellness, the list goes on. So we need to market it. First you need to understand, create the DNA, and then create the categories and the subcategories. So whether it's adventure, wellness, we are working on it. You have to understand we just started this. So we have not done this for, let's say, 15, 20 years. So we are going to build the brand and take it forward. And when it comes to room rates, Professor, good question that you asked me. It's very important. That's why we have created, along with all 4 institutes under the ministry, SLTDA, SLTPB leading, and then SLCB as well, 5 to 10 year master plan under the guidance of the president and the former minister as well. I'm not trying to be political here. We have a clear master plan. Next 5 years, our master plan, it's out already. We are targeting 5 million tourists by 2029, right? We don't want to be, what I want to clearly say is, we don't want to be a Malaysia or a Thailand. We don't want 20, 30 million tourists coming into Sri Lanka, and we are talking about sustainability here. We don't want 30, 40 story hotels coming next to Sigiri or the cultural triangle or next to the beaches. You know, there are some controversial properties that were there as well. So we want to be a sustainable destination. How do we do that? The perfect example is Maldives next door. You know, per day, their room rate, as in average, is $500 versus in Sri Lanka, when we took course 160, now it's 180. But for us to achieve that $500, it's going to take another 5 years. Why? Because we have only 9,000 registered high-end room keys in this country. Only 9,000 rooms. So we need to build the infrastructure and on a sustainability format. That's why green energy matters a lot. I think it was discussed before as well, many key occasions as well. So we need to build it. And out of the 5 million target, 2.5 million, we are looking at the upper middle segment to the high-end income. And then the other 2.5 million we are looking at is the lower middle segment to the backpackers. Don't forget, backpackers are the future leaders. People think, you know, why do you have backpackers, you know, going around the country and all that? They can be the next CEO, the entrepreneur, the lawyers, and the doctors of the world. So it's very important. That's why we are doing a separate campaign along with SLTDA on homestays for people to come and experience the Sri Lankan, culture, hospitality. And through research, why you'll come back for more is 33% of the travelers, especially European travelers, are repeat travelers, because they fall in love more than, yes, we have all the categories, whether it's adventure, wellness, and research has shown us. Can you guess why people fall in Sri Lanka when they come to Sri Lanka? Anyone? Because of our hospitality. You know, yes, we might have that odd three-wheeler guy or the bus guy squeezing something or what, I'm sorry for my language, but we have that. But in general, Sri Lankans are very hospitable. They love the 22 million warm hearts and the 22 million warm smiles. So altogether, Professor, it will be a complete thing. Thank you.
Thank you very much. I think our time is up. So let me thank our 3 eminent speakers, Mr. Anushka Wijesinha, Mr. Murtaza Jafferjee and Mr. Dinesh Weerakkody, and also our to panelists, Mr. Thisum, Jayasuriya and Chalaka, Gajabahu. So I do hope that, because these are very important matters we discussed, I have no time to go into detail. But what I would like to tell our OPA president and the chairman of the conference, that by tomorrow we should have a paper with all these things and put it not only in the newspapers, but also send it to all the political parties in order that they will get the message as to what has to be done in order that we will be able to recover and get back to normalcy. Thank you and all the best.
Thank you very much. We'd like to invite our panelists to please remain on stage. We have tokens of appreciation to be presented. We'd now like to invite Mr. Sarath Gamage, our president, and our President-elect, Mr. Sujeevalal Dahanaika, who will be accompanying our president, to join us up as we present tokens of appreciation. We'd like to get started by presenting a token to Professor Lakshman R. Watawala, who is the chairman of this session. So here we have it. Let's put our hands together, ladies and gentlemen, as we say thank you to Professor Lakshman R. Watawala. Our next token will be presented to Mr. Anushka Wijesinha, and we have the President of the OPA, Mr. Sarath Gamage, to do the honors. Our first speaker for today, Mr. Anushka Wijesinha. Let's put our hands together, ladies and gentlemen, for Mr. Anushka Wijesinha. Our next token goes to Mr. Murtaza Jafferjee, Chairman of Advocata Institute. We have Mr. Sarath Gamage to do the honors of presenting this. Let's put our hands together, ladies and gentlemen, Mr. Murtaza Jafferjee. We then move on to recognizing our two esteemed panelists as well. We'd like to get started by presenting a token to Mr. Chalaka Gajabahu, who is the Chairman of the Sri Lanka Tourism Promotion Bureau, also Deputy Chairman of the United Nations World Tourism Organization's Committee on Tourism and Competitiveness. Let's put our hands together, ladies and gentlemen, for Mr. Chalaka Gajabahu. And we have one final token to be presented. This one is for Mr. Thisum Jayasuriya, Chairman of the Sri Lanka Convention Bureau. Ladies and gentlemen, let's hear your applause for our panelist, Mr. Thisum Jayasuriya. And with that, we say thank you to all of our esteemed speakers and panelists who've added value to us today on our very first segment, International Trade, Tourism and Economic Engagement. Thank you for joining us, and we invite our dignitaries and speakers to take their seats in the audience. Ladies and gentlemen, it's time now for a quick tea break. We have refreshments served outside. We hope you'll be back in your seats by 11:30, ladies and gentlemen, where we will begin our next segment. Thank you very much.